California's Silicon Valley Bank is finding itself shut down by financial regulators. Today it was announced the California Department of Financial Protection and Innovation is gaining control of the bank's deposits, signaling the largest U.S. bank failure since the fall of Washington Mutual in 2008 during the global financial crisis of that year. In fact, there was reportedly a bank panic with worried customers trying to withdraw their money, as the Fed's standard insurance is typically to cover up to $250,000 per depositor. But since this bank was a favorite of the tech and venture capital community, they likely have more than that stored in their accounts. How much of that they can recover will be determined by the dollar amount that the regulators can get for selling the bank's assets, or if another bank buys them. SVB had announced on Wednesday that they were trying to raise over $2 billion in capital after losing roughly $1.8 billion on asset sales. However, they failed to do so. Officials at the Federal Deposit Insurance Corps told customers they will have access to their funds by Monday, and the seized assets are currently being stored at the newly created Deposit Insurance National Bank of Santa Clara. This shakeup comes during massive layoffs at big tech companies who are fighting off rising interest rates, and based on recent comments from the Federal Reserve Chairman Jerome Powell, these rates will keep on rising. And the bank's parent company, SVB Financial Group, is feeling the pain too, as their shares plummeted by 60% on Thursday and by another 60% in pre-market trading Friday morning before all activity was stopped. Treasury Secretary Janet Yellen is now meeting with officials at the Fed, the FDIC, and the Comptroller of Currency today to discuss the situation and what to do about it. Joining us now to discuss is Spike Cohen, the founder and chair of You Are the Power. Spike, thanks for being here tonight.
Thank you for having me on, Kara.
Great. So what are some of the immediate implications that spring to your mind upon hearing about this bank failure?
So what we know is that Silicon Valley Bank is a canary in the coal mine. We just don't know how big that coal mine is yet. Many people that are watching this may not have ever heard of Silicon Valley Bank, but the reality is this is not only the largest bank failure since 2008 and that worldwide financial collapse. It's the second largest in American history. Just a brief bit about SVB. They've been around for 40 years. They had over $200 billion in assets and nearly $400 billion in client funds. This is a huge failure that happened. We were being told that everything was fine up until pretty much earlier today when they announced suddenly that they needed to make a sale and the FDIC stepped in. They are at the forefront of the so-called transition to a green economy. They've committed billions or tens of billions of dollars to it over the years. And we're going to see just how big of a deal this is. Hopefully this is something specific to problems with SVB, but it doesn't look like it. It looks like the problem is that this is a primarily tech and venture-based bank that primarily serves tech startups and venture-based companies. And it looks like what happened was that their companies were burning through cash because of recession fears and rising costs.
No, that's exactly right. I want to read actually an excerpt from a CNBC article about this. It says SVB was a major bank for venture-backed companies, as you were saying, which were already under pressure due to higher interest rates and a slowdown for initial public offerings that made it more difficult to raise additional cash. So do you think, at least in some part, government did play a role perhaps in why we saw this bank fail?
Oh, it's played a huge part in it. The regulatory and tax regime that's in place, the signaled $6.8 trillion budget that Biden just proposed, I think yesterday, actually. All of these things signal that costs are going to continue to rise. The economy at the very best is going to slow down and possibly go into a full-on recession. And banks and businesses are taking note. Like I said before, SVB is a canary in the coal mine. I'm hoping that the coal mine is just the ESG, DEI, woke banking coal mine, and that this will be a shot across the bow for the entire sector, that they need to start taking profits more seriously than whatever social agendas they want to take on. But that may not be the case. This might be a macroeconomic problem where we're seeing companies across the country and across every sector burning through every bit of cash that they have because costs are rising and revenue is going down. And if that's the case, we are headed to not just bank crashes, but a full-on recession. recession. And, we have seen in the past what that leads to. It leads to bailouts. It leads to, the taxpayer being put on the hook for the speculatory profits that these multi-billion-dollar and multi-trillion-dollar companies were making. It's not going to be good. There's already been some signal in the market expectation that the Fed's going to lower rates, which means in addition to a recession, we could end up seeing even higher inflation.
And also, perhaps this is a glib thing to point out, but what comes to my mind when I think of this is, government causes problem, then government comes in to say they're the solution to the problem. They therefore then
Yes.
keep making the problem worse. Is that kind of what came to your mind when you hear Janet Yellen? That she's like, don't worry, I'm talking with the Federal Reserve, I'm talking with the FDIC, I'm talking with everyone. And don't worry, we're going to figure out what to do here. Does that kind of leap to your mind?
The very first thing I thought when this happened, and frankly, when every crisis happens, is that the very same people who have been telling us all along that everything is going great because they're in control of everything are about to begin shifting messaging. So far, they've already shifted messaging to something's going on, but don't worry, we've got it under control. And soon the messaging will shift to everything is falling apart, this is terrible, and it's because we don't have enough control. Oddly enough, whether they say things are going great or things are going terribly, the answer is always for them to have more of your money, more power, more control over everything, and for you to have less of that.
No, that's exactly right. And as you were saying, the canary in the coal mine, and hopefully, it stays contained to one sector and hopefully it doesn't spread from there. Maybe, there can be a good wake up call before we do hit, something much worse, an even larger crisis. But, one thing that's kind of been swirling through my mind is kind of some of the, and I know history doesn't necessarily repeat itself. It rhymes. I think Mark Twain was the one who said that. But you think back to 2008, aside from what happened with the banks and the bailouts, as you were saying, is you saw, the collapse in the housing market. I know that's one thing that's being predicted for, this year coming up, that the kind of bubble that's been accumulating, through the pandemic and through some of the red tape we saw in construction, and home prices going way up and skyrocketing by hundreds of thousands. Homes were already way overpriced, but it reached a fever pitch quite recently. Now we're hearing that we're going to see, big drops in big hot markets, nationwide. So does part of you kind of think, wait a second, some of this seems a little familiar?
Oh, it's very familiar. And I will tell you something. Take what happened in 2008 and add a zero to the end of it, and that's what it's going to look like. We saw hundreds of billions and trillions of dollars in losses, followed by hundreds of billions and trillions in bailouts. This time we will see trillions and tens of trillions in losses, followed by trillions and tens of trillions in bailouts, if indeed that's what is about to happen. And yes, if the banking sector collapses, then the housing sector is going to collapse, and along with it, everything else. Something to keep an eye on. At the same time that this has been going on, there have been reports that Wells Fargo and other banks have had a glitch, which has caused people to have negative balances in their bank accounts. Now, we don't know if that has anything to do with this or any other problem, or if it is indeed a glitch, but we will very soon. If by Monday that glitch isn't worked out, it ain't a glitch, and we're in something far worse than what happened in 2008. Time will tell.
Time will tell. And, as we're talking about all this, I'm thinking, well, here's part of the answer, at least, or perhaps the answer for why, the standard of living is declining, and everything still costs more. So you're paying more for less in this economy. And so sometimes I think, for some who want to, say, oh, the younger generation, they just are snowflakes and, get a job and buy a house, it's fine. It's like, well, there's much bigger issues, structural issues with the economy that have been ongoing for many years. And we're kind of hitting an inflection point on a lot of that. So it's not something to just kind of shrug off, because it is quite serious. So Spike, thanks for joining us tonight.
Absolutely. If you have not heard of the Austrian business cycle before, look it up, folks. That's exactly what's happening right now. And thank you, Kara, for having me on.